Nobody warned you about the tax bill, and that's exactly how the government likes it. One day you're celebrating landing your first big freelance client, and the next you're staring at a number that makes your stomach drop because you forgot that nobody's been withholding a single dollar for you all year. Here's the brutal truth. When you work for yourself full-time, you don't just owe income tax, you owe self-employment tax on top of it, which currently sits around 15.3% on your net earnings. Think of it like this. Your employer used to quietly pay half of your Social Security and Medicare tabs, and now that you're the boss, you're picking up both sides of the check. Most new freelancers make the same rookie mistake. They see a big deposit hit their account and feel rich, spending freely like the money is all theirs. It isn't. And that gap between what you earned and what you actually owe is basically a loan from the IRS that they never told you about. So what's the real number you should be setting aside? The honest, practical answer for most full-time freelancers in the US is somewhere between 25 and 35% of every dollar you bring in, depending on your total income and your state's tax rate. If you're in a high-income state like California or New York, creeping toward that 35% end of the range isn't paranoia, it's math. Here's where the psychology gets tricky. Because saving a third of your income feels painful when you're also trying to cover rent, software subscriptions, and oat milk. But think of every invoice you send as having a silent co-owner named Uncle Sam. And his cut comes out before yours always, without negotiation. People keep spreading the myth that freelancers get away with paying less in taxes than employees. And that is almost always backwards. Yes, you can deduct legitimate business expenses, your home office, your equipment, your software, but after all that, you're still on the hook for self-employment tax that salaried workers never see in their paycheck. The historical lesson here is painfully consistent. Freelancers who don't set money aside quarterly end up in April scrambling to borrow, dip into savings, or negotiate painful payment plans with the IRS. Quarterly estimated tax payments aren't optional busywork. They're how you avoid underpayment penalties that add insult to an already expensive injury. The practical move is to open a completely separate savings account the moment you go full-time freelance and automate a transfer every single time a payment clears. Treat that account like it doesn't exist for personal spending, because frankly, that money was never really yours to begin with. Now let's talk about the irony here, because it's almost poetic. Freelancers often earn more per hour than their salaried peers, yet feel broker because they're managing cash flow, taxes, and benefits all by themselves. The freedom you wanted came with a full-time, unpaid job as your own accountant. And most people don't realize that until year 2, when they've already made the expensive mistakes. Don't let perfect be the enemy of functional. You don't need a CPA on day 1, but you do need a system. A simple spreadsheet tracking income, estimated tax percentage, and a separate savings balance is genuinely enough to keep you out of trouble in the early stages. The broader cycle here is predictable. People go freelance, feel liberated, undersave, get hit with a tax bill, panic, and either quit or overcorrect with anxiety-driven hoarding of cash that stalls their growth. Breaking that cycle is as simple as deciding upfront that discipline around taxes is a non-negotiable part of your business model, not an afterthought. The philosophical bottom line is this: the freelancers who build sustainable, stress-free businesses aren't necessarily the ones with the most clients or the highest rates. They're the ones who mastered the boring, unglamorous discipline of keeping their financial house in order. Knowing exactly what you owe, setting it aside without drama, and paying on time is actually one of the most powerful competitive advantages you can have as an independent worker. If you want to sleep well as a freelancer, the number is simple. Save 30% as a default, adjust as you learn your actual effective rate, and never let a good month convince you to treat tax savings like a slush fund. Consistency in your process matters infinitely more than perfectly optimizing every deduction, because a system you actually follow beats a strategy you only admire. And if your freelance journey is leading you toward bigger financial goals, building wealth, investing in real estate, or taking on contracting work that requires capital, we can help you get started, whether in real estate investing, home contracting work, and finding lenders. So check out our links in the description below.